Alright guys, welcome back to my YouTube channel, and today I'll be walking you through how to spot out high key levels. So let's go over to the chart. Alright, so what are key levels? Key levels are um, areas in the chart in which market tends to react strongly from. It can act as a support or resistance. So let me explain it to you here over in chart. So now let's say we are in a downward trend, as market is bearish. We're able to see that in the bearish scenario, we identify that there is sequence of lower highs, sequence of lower highs, lower low, lower high, lower low, lower high, lower low, right? So now we're able to identify that this trend here, the market here is what? Bearish, right here. So now, when price comes to take out a lower low, right, in a bearish market, what the price do? Price comes to its breaker and then continue to sell. These are areas, these are key, this is a key level at which sellers are waiting for price to react into this area to start selling the market. And see again, price came here, took out this low right here, as you can see, and it came here to sell from here. It's exactly the same thing. So now, what are you expecting? We're expecting that price should push into this level again and what? Take the sell. Can you see? Now, the same thing for a bullish market. So let's take this all out and let's okay. So now, in a bullish market, right, we want to identify that in a bullish market, we see sequence of lower high, higher high, higher low, higher high, higher low, higher high, higher low. All right. So now you will spot out that this is in a downtrend, in an uptrend. Sorry. So you can see when price comes to take out this high right here. So what did it do? When it took out this high, it came into the breaker here and bought. You can see when price comes again, take out this high here, comes into this breaker to what? To buy. You can see. So it's when price push up the momentum, it reacts from the breaker to buy. Sometimes it can come into the breaker, it can come into the other block. You get. So now already the time frames I use for this is usually in the daily time frame and the 4 hours time frame. So let's look at BTC right now. Let's go back. So over here on BTC, right, let's look at this level right here. We will examine that the trend on BTC is okay at this level here, this zone here. We have to see that the trend here is bullish, right? So now let me walk you through on how to identify key levels. So you can see when price comes to take out this high right here, as you can see, price took out this high here and also took out this high here. What did it do? Price came into this level, into this breaker, and it reacted from there and it bought. Can you see that? So price reacted from that level and it bought. The same thing again happened here. Price came here, took out this high. You can see price took out this high and also took out this high here. That is right. So now you can see that price is going to react from here. I can see it came here. Okay. Still just minimize it to this level. Came here and it's bought, breaking out this high right here. So when you see that price came here and took out this low, we already determined that the price basically now became bearish, right? For example, we are saying that we are in an uptrend, right? Now let's say we are seeing a sequence lower highs, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and then price comes to form a market structure shifts and they say by they form a higher highs, higher low, higher high right here, right? You can see immediately price comes to take out this high here and this high, right? It's going to, then after taking out these two highs, it's going to now come here, form the inducement, and price is going to dip into this level and buy. You can see that. That is exactly what happened in this buy here. Sorry, that's exactly what happened here in this buy. Price came here, took out this high, that is, it broke this structure, We can identify this place as a double breakout structure, and you can now say that price came into this zone to buy. The same thing here too, right? So when price broke these two highs, this was the inducement it formed. This was the inducement it formed here, right? So this was the inducement right here. Can you see that? So this was the inducement. And when price came into this inducement, what happened? So this inducement here has already reacted into this other block here. Can you see that? It's reacted into this other block. So that's why we did not use this level here. So we now push over to the next level here. Okay, let's just, all right. That is this zone here. Which price came, we saw a confirmation for a market structure shift to the upside, and we decided to now buy from here. Can you see that? So that's what we have catch this by taking out this high here. You understand? So now it's the same thing that happened here right now. When prices started to sell, right? This is the BTC is bearish here. So what can we determine now is that you can see a sequence of this lower high, lower low, lower high, lower low, right? Lower high, lower low, right here. You can see that, right? So what can we spot out here? We want to spot out that that BTC now is now bearish, right? We have seen that BTC is bearish and all this. So that okay, BTC came here and took out this low right here, took out this low, and when took out this low, it reacted off from the breaker. As you can see, the way I explained it, reacted off from the breaker and started to sell. The same thing happened here. This level here, price came here, took out this low right here. I'm taking out this low, it came here again, take out this low here. That is known as a double breakout structure. So looking for more continuation levels, and now this level here was the inducement right here. You understand? This was the inducement. So you can see that this was the inducement, and the level we're meant to buy from was meant to be from this breaker here. Can you see that? This breaker. But price didn't pull over into this breaker, but what did it do? It just continued to sell and it broke the structure here. Now it's the same thing here too, you get. So when price comes into this level here, okay, so price came here, took out this low right here, took out this low here, right? And now in doing that, it also took out this low here too. So it formed another double breakout structure. There was this high here. So there's this high here. You can see that price came, took out the high right here. And what did it do? Price reacted from this level. You see this level acted as an area of demand, which caused this buy, taking out this liquidity, but price wasn't able to dip into this zone here, and we're expecting it to now sell. So now already identified the double breakout structure. You're now expecting that price should dip into this level, which it did, and now we are selling again. So it's the same thing for a bearish scenario, right? Okay, let's do one more example before we end this video. All right, so let's look at this level here on BTC. What can we identify on BTC here? We identify that when price came here, it took out multiple highs right here, and we were expecting that price should dip into this level here, but it didn't happen. Price didn't come into this level here to buy. You can see that rather the joy just came here, took out, swept this liquidity, and started to pump up for more buys to the upside. It's exactly the same thing that happened here. So you can see price came here, Okay, let's see. I'm looking for a very good example. Okay, here, price came here, took out this high right here. You can see that after taking out this high, we also took out this high here, right? So this is a double breakout structure. Then after that, I formed this inducement here. So this was the inducement level right here. This is the inducement. Yeah, so brick pause, please, if you know you have gotten this far, don't forget to like, share, and subscribe. Let's go at it. Let's continue. So now we have already identified these inducements already that occurred here in price. So now we can be able to mark out our area or reverse possible area here, a key level. So you can see price came, reacted to this key level here and said to buy. The same thing here again. When the price came here, it formed a double breakout structure. It broke this high right here and also decided to come here to break this high here. You understand? So immediately price broke these two highs. Now I had areas that price was meant to come. We had this level here, which price did not respect. Price didn't respect this level. You see the importance of looking for a confirmation in lower time frame, right? Because price can choose to not respect the breaker and decide to go to the other block. That's something I was explaining here on the bullish. I told you guys that it is not only the breaker that price will retrace to. Price can decide to retrace into the other block and then buy. Like you can see it from here. After seeing this double breakout structure right here, I can identify this inducement that happened here. All right. So what the price do now? Price decided to now push over into this level here to dip into this zone here. So I'll just mark this level because the candle is too big. Alright, so now this is the level that price had to dip into because it's a 4 hours time frame and very soon I'm going to trim it to that level. Like I told you, I use daily time frame and 4 hours time frame to align my key levels. So you need to know that once your daily time frame and your 4 hours time frame aligns, then you are good to go. So immediate price reacting to this level here, it pushed up to break this high here. Can you see that? Right? Pushed up to break this high right here. Can you see? So price broke this high. And same thing again and again. So now let's go through the steps in identifying a good key level. Okay, so now these are the steps in identifying a good key level. So let me write it down. Okay, let me write it down so that you guys will note it. So step number 1 is that it must align with okay, let's do it like this. The daily time frame, okay, the daily time frame key level must, okay, let me just type this thing, must align with the 4 hours time frame. Now the second one is that there must be liquidity present. So the third one is what? The third one is always wait for a confirmation before buying, either from the breaker or from the other block. So you say wait for confirmation before buying or selling from the OB or the breaker block. Right, so yeah, so that'll be all for today. All right, so do not forget to go back to the chat after watching this YouTube video and practice, because they say practice make perfect. Yeah, and lastly, don't forget to like, share, and subscribe. Let's get to 100 subs. Thank you.